What's interesting about right now, maybe the most interesting thing about the environment we find ourselves in right now, and why the premiums are so low, is that really starting in 2024, we had the rise of NVIDIA, the accentuation of the Mag 7, the huge demand for cryptocurrencies, Bitcoin, you've talked about that for a long time. And so the American public did this 180 during the pandemic and the banking crisis from risk off to risk on. And we saw a lot of selling and non-participation in the metals market. So the premiums went down. But here's where it gets really interesting. Where we are right now is a very unique situation because you still have the American public who has yet to really take your advice, Robert. They're beginning to. They're waking up. But this is simultaneously happening when the COMEX market is experiencing the largest deliveries that they've ever had in the history of the market. In fact, the May delivery contract for COMEX, where the prices are set globally, delivered the largest amount of gold and silver in the history of the COMEX ever. The biggest money up here, they're standing for delivery. They're the ones pushing the price higher. The public hasn't. The public has a very tiny, if any, allocation to precious metals. In fact, Rick Rule says 0.5% across the entire United States, from Joe and Jane six-pack to the Harvard Endowment Fund in terms of allocation to metals. So what that means is there's more physical metal available on the street than the dealers have the ability to sell. And so as more people come in, the bid prices are getting lower and lower and lower. At the same time, the people at the top are draining the world's exchanges. It's just a matter of time. So anyways, all I'm trying to simply say is this. Until 2020, premiums were almost consistent forever. You pay a few percent over spot when you buy, you get a couple percent less, but still over the price of spot when you sell. Since 2020, everything's gone crazy, whether it be premiums that are higher than anything I've ever seen in my career, to where we are right now. And in defense of this gentleman, I will say industry-wide, the premiums are lower than I've ever seen, ever in my career. And it's not us, it's the people one step above us, the primary distributors, that are the market makers. That's really as honest of an answer as I can give you, is that when I take in $1 million worth of gold and silver, if I can sell it to my clients, great. But if I'm a coin shop in Arizona, I may not have that ability and I may not have that liquidity. So I have to turn around and sell it to a company like me or a company above me, the primary distributor, and the bid prices are going to be lower because there's so much excess supply built up because the public has been chasing profit instead of realizing what the biggest money in the world is doing, standing for physical delivery. And it's a cycle. When we're at the bottom end of the cycle now, I would expect to see premiums move much higher industry-wide as there's more awakening in the American public who finally start to say, you know, Robert Kiyosaki was right a long time ago. I should have been buying silver and gold. And when that happens, just like that, the premiums will flip. So in his defense, it's probably not him as much as it is the players above him who are bidding for the product he will return because he can't hold all that product, whether it be because he can't hedge it or because he doesn't have the checkbook to pay it and leave it sitting on his shelf. That's the real big answer. Most people, Robert, lack the sophistication that you have. Now, on your end, it was trust of someone you've worked with for a long time. Sending it in to a dealer like me or your friend in Austin, who I know you're talking about, both good companies, takes a more effort. You have to box it up and have to ship it by FedEx and go through all that nonsense. Rather, you throw it in the back of your car and go see your buddy down the street. That convenience is typically offset by less competitive pricing. In general, now I don't want to say all of them, but in general, coin shops do not have the ability that a company like mine does, or the gentleman that you're speaking of in Austin does, because they're long established companies that are doing millions and millions and millions of dollars of business a month and have the wherewithal to be able to write you a check for that and to even be able to inventory it after that fact because they can hedge the exposure. Whereas a local coin shop typically doesn't have that luxury, whether it be and of checkbook. I'll give you another example. There are a lot of people in those little coin shops that will, a guy like you, not you, but a guy like you will walk in and say, I need to sell this. And they'll say, okay, 1 second. And they'll go into the back room and they'll call me and they'll say, Andy, I have a guy in my front of my store right now that wants to sell $500,000 in gold. I can't really take that responsibility. Can I lock it in and immediately sell it to you? Sure, go ahead and do it. Bang, he'll do that. They don't have the liquidity. It's all boils down to liquidity on that local level, Robert, and that's probably the biggest issue. So not as much as you would think. It's above 36 right now. It is 36.60 as we speak. It touched 37 the other day. It's the third time in history that it's been this high. There's been 7 attempts to break 35 since 2011. They've all failed. This is the first that hasn't. If it closes the month of June above 35, it's incredibly significant. I believe you'll get the hedge funds jumping in at that point. From a technical standpoint, that's huge. We've seen the weekly close above it, in fact, above 36. With all of the Fed announcements like the non-farm payroll and the interest rate announcement that's coming up in a couple of weeks where they're probably thinking of keeping the rates where they are. These are all big things leading up to the end of the month. We want to see it close above 35 or 36, but ultimately, the only word that comes to my mind, Robert, is asymmetric. Asymmetrical in this respect means super low downside and amazingly high upside. There aren't many assets that you can say that about. You could have said that about Bitcoin when it was $100 a coin, very low downside, amazing upside, looking back at it in retrospect. So, but I think that's where we are with silver right now. It's a hedge against the stupidity of our monetary policy and the irresponsibility of our fiscal policy. That's exactly right. The dollar's down 9% this year. Silver is up over 40%. And so it's an environment where you're not buying gold and silver to become wealthy. You're buying it because it is wealth. If you own enough of it, yes, in those terms, you would be wealthy. Yeah. But I think this is something that's very, very important to understand. You're the one who I credit with, I've said this comment 1,000 times, you learn from Buckminster Fuller, you can't get out of the way of what you never see coming. And that's a very big problem here. People don't see the problem with the dollar that is coming. The de-dollarization trend is continuing, and that leads to a whole slew of other problems. At the same time, the Treasury demand is falling, which leads to higher interest rates, which leads to a slowing economy, which leads to all sorts of other problems. But when I look at silver, I see some very interesting things. I see the LBMA, London Bullion Metals Association, which is a T+1 settlement system, meaning T is a trade day plus 1 to settle. Your metal should be delivered to you or moving on the 3rd day. The LBMA says, no, we're so backed up with delivery requests, it's 8 weeks. Really? T plus 8 weeks when I'm expecting my metal in 3 days. What if I own
they can't deliver? They cannot deliver for 8 weeks.
For 8 weeks. Imagine you own the Kiyosaki jewelry empire and you're making jewelry all around the world and you source gold and silver bars in London so that when you need to fabricate your metal at the call of a snap of a hat, in 3 days, your metal's moving to your refinery where you're making this stuff. Robert, I'm so sorry, man. We're at 8 weeks because the Bank of England says there's not enough in the way of trucks or manpower. Really? The Bank of England doesn't have enough trucks to move my gold and silver. That's a problem. That's a default. Or whether we're seeing in the United States where the largest single delivery of silver ever in the history of the COMEX happened in May. Or whether we're seeing China, which is the 2nd largest producer of silver in the world, literally buying silver from all the miners directly in Peru, which disintermediates the marketplace. They're buying what's called doré and concentrate. Doré are the bars the miners make that are crudely refined, maybe 30 or 40%, before they send them to a refiner to be purified. And concentrate is a sludge, liquid sludge byproduct of that. They're buying all of that stuff in Peru, right from the miners, and then sending it back to China to be refined. They're paying double what the West will pay, but this accumulation is totally opaque. How much did they buy? What effect does it have on the price? On the supply, nobody knows. But this is coming from the 2nd largest producer of silver in the world. Why are they doing this? Why has India bought over 900 million ounces in the last 5 years, more than the LBMA has in total they've bought in the last 5 years? And now Russia, accumulating it for strategic purposes by the state, the first country to say that. Well, all of these things were happening when you and I were talking over the last year or two, but now someone within the Trump administration, thank goodness, is wise enough, I believe, to have said, listen, if we don't start doing what the rest of the world is doing, we're in trouble. And this huge rush of both gold and silver into the COMEX, which is standing for delivery, which is way different than anything we've ever seen, goes to tell you that the people at the highest level who know what's coming are favoring physical possession in their own hands rather than playing the game of paper-long contract, either in London or the United States. So just by that very fact that these people are accumulating this much, which is an anomaly. It's 5 feet of snow in Phoenix in July. This doesn't happen. It's happening. And that should tell everyone that all the things that you've been talking about for a very long time are now starting to manifest at the highest levels. And unfortunately, to your experience, we're still a rotation or two behind that level down here at the retail level. So a lot of these retail, especially local coin shops, they've gotten a lot of people that come in and say, look, I need to sell, maybe to put food on the table at record high credit card debt and lowest savings rates in forever. Or maybe I just need to, because gold and silver are high, I'm going to get out. And these people, unfortunately, these shops just don't have the pricing power to be as competitive as you might like at this point. I'm providing you liquidity. That may change very quickly when the demand goes shoot and everyone's buying. Yeah, sure. They'll buy it back and turn around and sell it at a profit. And that premium that you'll get will be much better. Unfortunately, you are just a victim of timing, in my opinion, more than anything.